Millions of new users were coming in with each successive quarter. On October 5th that year, Netflix reached its then all-time high, breaking January's 565. After that, the month was pretty good for Netflix, as on October 29th, it was trading at 690. The recently released Squid Game had already blown past Lupin and Money Heist, becoming the most popular foreign-language Netflix original. The month of November was steady for Netflix. That month, Disney stocks dropped by more than 13%. December saw some decline in Netflix, but it was looking pretty okay overall. The global video streaming industry was valued at $50.11 billion in 2020 and rose to $60.1 billion by 2021. Then came the year 2022. The very first trading week of this year initiated a Wall Street decline, which is still going on. Netflix added 8.3 million subscribers in the fourth quarter of last year, and before proceeding, please subscribe to my channel as well for informative tech and financial market research videos every week. However, in January this year, the company said that it expected growth to slow in the opening months. The news in the company's earnings release prompted the stock to drop nearly 20% in after-hours trading on January 20. For the first quarter of this year, Netflix forecast an additional 2.5 million subscribers, down from the 4 million it added during the same quarter of 2021. The announcement was of one of the streaming giant's slowest opening quarters in years, and on April 19th, another shocking report was announced. The company shed more than $50 billion in market cap as a result. At least 9 Wall Street firms downgraded the stock on the disappointing report. That day, Netflix closed down a whopping 35%. Currently, in November, Netflix's stocks have been lingering around $290. Why has Netflix dropped more than Disney this year? Netflix is certainly not the only streaming company falling this year. Disney is down by 40% in 2022, but Netflix has suffered more. Netflix stocks are down by 55% this year, and that after a mild recovery after reaching a low of 166.37. Talking about tech, Meta's CEO Mark Zuckerberg has lost almost $100 billion in his net worth, and Amazon's Jeff Bezos has lost around $50 billion this year. The main difference between Netflix and other streaming services like Disney Plus or Amazon Prime Video is exclusiveness. One possible reason behind Netflix's big decline is people's decreasing interest in streaming services overall. Pandemic showed a very bright future for these companies, as people were stuck at home with nothing to do. Now that things are slowly getting back to normal, people might be less inclined to spend $10 to $20 on these services. This made investors think that Netflix's stocks were way overvalued. The cost of living and the fear of a recession have only added to the problem. Will Netflix stocks recover? Netflix's upcoming launch of a lower-cost, ad-supported subscription option could mean big things for the company's future. While Netflix itself is only estimating around 40 million subscribers will be using the cheaper option by late next year, research and analytics firms suggest interest in this lower-cost service could be far greater than Netflix publicly anticipates. This could pave the way for renewed and much-needed subscriber growth. A recent survey shows some interesting trends that could indicate just how successful this new product tier could be. According to the survey, usage of ad-supported streaming services may be stronger than initially thought. The poll of around 2,500 American adults indicated about 2/3 of subscribers to a streaming service like Discovery Plus or Paramount Plus are actually tuning into the ad-supported version of those platforms. This trend could hold true for Netflix as well, with as much as 60% of the company's worldwide streaming subscribers using the ad-supported option by 2027. This could mean big things for Netflix's bottom line, with ad revenue accounting for nearly 1/4 of United States revenue by 2027. For a stock that has seen better days, this could be just the boost Netflix needs. However, the overall economic outlook, which plays a big role, is still murky, and it's hard to say for certain how long it will take for Netflix's stock to recover.